Good morning, traders. This is Evelyn from Astra Montis, and I'm here to bring you the latest insights for the week of November 18 to November 22, 2024. Let's dive into what to expect in the upcoming week. This week unfolds against a backdrop of heightened economic and political activity as markets react to significant developments across major economies. The US dollar has surged on the back of President-elect Trump's anticipated legislative agenda, fueling speculation about the Federal Reserve's next moves. Meanwhile, upcoming preliminary S&P Global PMI data for November will be closely scrutinized for signals of a potential Fed pause. In Europe, the threat of US tariffs looms over the Eurozone, while in the UK, traders await critical CPI data for early signs of inflationary pressures. As Canada and Japan prepare to release key inflation reports, the global economic landscape remains intricate and volatile, presenting both challenges and opportunities for investors and policymakers. The US dollar surged as Trump trades persisted, with Republicans controlling Congress, facilitating Trump's legislative agenda. The president-elect's promises of corporate tax cuts and tariffs, particularly on Chinese goods, are expected to drive inflation, prompting speculation that the Fed will delay rate cuts. With October CPI data showing persistent price pressures and Fed Chair Powell indicating no rush to lower rates, market sentiment is shifting. There's now a 37% chance of a Fed pause in December, increasing to 57% for a January hold. Next week, dollar traders will closely watch the preliminary S&P Global PMI data for November, set to be released on Friday. These figures could provide insights into whether the U.S. economy's condition supports a slower pace from the Fed. Particular attention will be on the prices charged of indices to see if October's price stickiness continued into November. If so, the likelihood of a January pause could increase, potentially boosting Treasury yields and the US dollar further. On Friday, S&P Global will release the Eurozone and UK flash PMIs for November, preceding the US data. Better than expected Q3 GDP and October CPI rebound have reduced the chances of a 50 BPS rate cut by the ECB. However, fears of higher tariffs from a Trump-led US government could impact the Eurozone economy, reviving speculation of bold ECB action in December. Despite potential improvements in November's business activity, concerns over Trump's policies may limit any euro rebound, keeping gains short-lived. Pound traders will focus on the UK's upcoming releases before Friday's PMIs. Wednesday brings October CPI data, followed by retail sales on Friday. The BO recently cut rates by 25 BPS and signaled caution on further easing, leading markets to expect a quarter-point cut in March 2025. Despite September's headline inflation dropping to 1.7% Y/Y, the BOE's upward revisions for 2025 inflation to 2.7% Y/Y may have tempered expectations. If October CPI shows early signs of rising price pressures, it could delay rate cut expectations, potentially boosting the pound, especially with strong retail sales. Next week, inflation reports will be closely watched, starting with Canada's CPI on Tuesday and concluding with Japan's nationwide CPI on Friday. In Canada, there's a 35% chance the BOC might enact a consecutive 50 BPS rate cut in December. Although October's job data was mixed, with unemployment steady at 6.5% and employment growth slower than expected, the loonie has weakened against the robust US dollar, hitting levels unseen since May 2020. October CPI in Canada showed both headline and core rates at 1.6% Y/Y, with trimmed CPI at 2.4%. Any further cooling in inflation could reinforce the likelihood of a December rate cut, potentially driving the loonie even lower. Japan's data will be the final key inflation metric for the week, influencing market sentiments and central bank expectations. This week has been marked by significant economic developments worldwide. The US dollar's rally on Trump trades, the Fed's potential pause in rate cuts, and crucial PMI data all contribute to a dynamic market environment. In Europe, the anticipation of US tariffs and the release of flash PMIs will shape economic outlooks, while the UK CPI and retail sales figures are set to influence BOE policy expectations. With key inflation reports from Canada and Japan on the horizon, the global economic landscape remains fluid and complex. Stay informed as we continue to monitor these unfolding events and their impacts on markets and investors in the coming weeks. To conclude, as we navigate through this week's trading landscape, it's essential to closely monitor these significant updates. We appreciate your confidence in our insights and wish you prosperous trading in the days ahead.